of that mark. But as you all mentioned, the global equity market itself is in a bit of a tizzy. So let's welcome Adrian Mowat, investor Hong Kong, who joins us now on the phone line. Hi, Adrian. Good afternoon from India. Well, global markets itself are in a bit of a tizzy. Well, what would you attribute it to? You know, you have hawkish commentary coming out of the Fed speaker overnight. You have Chinese data that continues to disappoint. So what would you attribute bulk of it to?
Yeah, so I think the most important thing is to put up a one-year chart and just look at the rally that we've had since the October lows. And remember that rally was partly driven by a decline in US bond yields, which was very much driven by some of the comments coming out of the Federal Reserve. And I suppose we had on the 13th of December them changing their dot plots with, some rate cuts being put in. And maybe the market's just got overextended on expectation about rate cuts. And we're seeing, a little bit of a correction in what's been quite a powerful rally. And I put it in that context rather than, getting too dramatic over, what's a bit of price action over 2 days, if we include what's gone on in the US yesterday.
Adrian, in fact, I remember I was looking back at our chat on the 10th of January, and you had said that we need to look out for the US bond market very carefully to see the next move in the next cues. Yeah. And for what it's worth, we're back to second guessing the Fed, and now people feel maybe we won't get as many rate cuts as quickly. But for the time being, I just want to focus on India and on something like HDFC Bank, because you've watched this market for so long, and I'm sure you've watched this company, this bank as well. So the market's absolutely worried in terms of the time it will take for the combined merged entity to stabilize with respect to growth and deposits. I don't know if you had a chance to look at what transpired over the last 24 hours, but one of the biggest blue chip banks in India. Any thoughts?
Yeah, so look, I'm not a stock analyst, but I can see the headlines in terms of disappointment around the margins. At a strategy level, I am concerned because I think to maintain the powerful rally that the Indian market enjoyed in 2023, we need a bit of sector rotation. And I would actually argue that this is also true in the global markets, where you needed a sector rotation towards financials. And to some extent, that is actually what has driven the more recent moves in the US and European markets. And in India, we're not getting the rotation. And that does make me a little bit concerned that this rally may not have the legs that you would get if it was a more broad-based rally. So the specific HDFC news, if you project that across the rest of the financials in India, is definitely an important negative for maintaining this rally.
Right. No, I got that. Adrian, some of this, in the US, for example, the rally in the dollar is being talked about quite a bit. These comments which we were discussing earlier, Christopher Waller there, he sounded hawkish, but is he really hawkish? I mean, I read something where, March is 2 months away. And if he's saying that, he's saying, well, maybe the first cut is going to be a little away. I mean, March is a little away. I mean, I'm just saying, our markets may be reacting a little too severely to what he said. And will they sort of come back around on this one?
Okay. Well, I think if you look at the futures market for the Fed funds rates, that to me is overly bullish on cuts. And that's a risk to the market. And what the future market is saying is far more cuts than what the FOMC has said on the 13th of December. And, I think the story for the first half of this year is there is a disinflation trend, but the disinflation trend is going to result in an increase in real incomes, which is going to mean the consumer actually is more robust in the US and Europe. And so the pressure on central banks to cut rates will just not be there.
But is there any chance, Adrian, that we will see the dollar going back to 108, 109, 110 plus kind of levels, yields going back to the 5% levels from where it's come off? I mean, is there any case? Or you think that is a possibility?
Look, the dollar is going to strengthen. It weakened, with these excessive rate cut expectations. And it's now going to strengthen as people realize they've priced in 2 new rate cuts.
What's your expectation of how many rate cuts are we likely to see? Because as Waller pointed out, we may not see as many rate cuts, or the rate cuts may not be as fast and deep as we've seen in the past. So your own expectation of rate cuts this year from the Fed?
I would go with the experts and the guys making the decision, which is the Fed. And if you look at their end of the sort of median dot plot at the end of the year, it's 4.6. So that's 3 rate cuts, very much back-ended.
Okay, that's the US picture and what we can expect on the rates trajectory. Adrian, to come back to India, just to follow up on the point that you were making earlier, that you sounded a bit concerned about the fact that the sector rotation is not happening, and everybody's been waiting for that. This year started off with a great promise that it's going to be a year of the banks. Not quite looking that way today as we see the screens. But, beyond this headline, what is your overall sense? I know you've been optimistic on the economy, on the growth here, but just from the market perspective, 22,000 was scaled, and now we have these issues with banks. How would you look at this market?
Yeah, I think we're into a first quarter of consolidation in the Indian markets. As we sort of look for the next theme, it's a market that stands in incredibly sharp contrast to, say, China or some of the other big EMs, where there's massive pessimism. People are optimistic about India. It's reflected in the valuations. And to be fair, the Indian economy has delivered, and as have certain of the corporates. But I think we've got a global consolidation in markets going on as we go to a more reasonable view about the Fed. And India will just be part of that trend.
Okay, Adrian, we'll leave it there. Thank you very much for joining us on short notice. Appreciate your time here on CNBC TV18 as always. And it is a pleasure getting that. Well,